Target getting hit today after the retailer warned profits this quarter would be lower than expected. Target says it is spending more on labor, selling fewer high-margin items, and writing down apparel and other items that aren't selling. But the company is seeing a huge surge in online shopping. Here's what Target CEO Brian Cornell told CNBC today.
As we went into the month of April, and millions of Americans are sheltering at home, and they've heard from public health officials that it's best to try to minimize your time in physical store locations, we saw a huge spike in digital comps. For the quarter, we're saying we're up over 100%, but in April alone, our digital growth is over 275%. And we've just seen Cyber Monday occur almost every day, except the volume is twice the size that we've normally seen on even a Cyber Monday peak.
That's all well and good, Karen, except on Cyber Monday, I'm not buying toilet paper and other staples and groceries, right? I mean, you're buying sweaters and things like that, and that is exactly what Target is not selling, and that is exactly Target's problem.
Right. I do think, though, that is somewhat of a near-term problem. I mean, a couple of things went wrong. Something else that they pointed to, which I think is not a bad thing necessarily, is they're paying their employees more. They're also providing more benefits for their employees in terms of child care. Employees that are 65 or older, I think they can have time off. So I think that's an important investment in their business to have their employees feel that they're important to the company. So I'm not against that at all. It does create, of course, higher expenses in the short term. But I think that one of the other things he said that was interesting was he believes that customers will want to consolidate the number of vendors they do business with. And maybe that lasts longer than just the pandemic. And I think they'd be in a very good spot, having been so successful at buy online, pick up in store, and making it easy for the customer to get what they want online. That's been, obviously, those numbers are absolutely gigantic. Those margins, however, are smaller. But I do think that the other thing that Target has going for it is it's one of those stocks that's benefited in the pandemic, but it's not crazy expensive at all. And if you look at Walmart, which is also up a lot, at Costco, those multiples are significantly higher. So I'm long Target. I'm short some out of the money calls that are a little more out of the money now. I like it right here. I don't think this was bad or particularly surprising. They gave you a heads up about this, I think, around March 25th.
Right. But Grasso, you think the premiums for Walmart and a Costco, those are worth it, in your view?
Yeah, I think they are worth it, and I think they are susceptible, though, once we start to come out of this, of people thinking that you're paying a premium and selling those and trying to get into something else. But I think that will be short-lived, because I think the premiums are, as we're starting to see it, these are the companies that can survive and navigate through these difficult times. But getting back to Target, so for me, it goes Costco, Walmart, then I bottom fish with Target. And I think that when you're looking at Target, it's so much different than a Kohl's stores. And if they're building up and taking market share, even though the category mix is not what they want it to be right now, once we get through this time period, those customers are not going anywhere, and they're buying stuff that has better margins on it. So I'd be a buyer on Target on this weakness.
Tim, you're shaking your head. Quickly.
I'm not shaking my head so much as Steve. I'm thinking about the sector, and I'm thinking about how much sales have been pulled forward. We're talking about a recession, folks. We're talking about Walmart's the biggest consumer shopping opportunity in the country. It trades at a 30% premium to the S&P. During other recessions, while it's been more defensive than other parts of the retail sector, it still tends to contract by 10%. That, to me, also relative to the S&P, means this multiple should come down 25 to 35%. I'm not saying that it will, and I know Walmart has been re-rating on their digital dynamic here, but everything Target told you is that consumables are low margin, and this is a case where not only do we have a pull forward, but that we have a consumer that is not in the same position coming out of this as they were going into this. You should not be overpaying for these names, especially now.
I don't know, Guy, I think you're going to keep your closet full of toilet paper stocked well beyond this pandemic.
When you get to my age, it's the only thing you can do there, Melms, you know? I mean, I'm just saying. You know, I hedge myself, by the way, I've cut back on my Cheerio intake, but that's probably way too much information.
Wow.
In terms of trading the stock, I mean, you go back this time last year, Target was a $70 name, rallied up to $130. So if you're just looking for, you know, an entry point, as cliche as it sounds, I mean, $100 actually lines up pretty well. I agree with Tim. I thought Walmart's too expensive all along. I think Target should have a higher valuation. I think Walmart should come down. So if you're looking for that trade, you know, I think against $100, Target looks sort of interesting to me, Mel.